just imagine your money could be turned off with a click of a button from above, or you can't buy this amount of meat this month. So it's programmable so that you could see how that could be used by the government in nefarious ways to stop people from spending their money the way that they want to and be used as a tool of oppression.
In the United States, the money in the bank isn't probably at super great risk. The bigger risk is more of a long-term risk of continued centralization. And then you understand there's a solution like Bitcoin, it makes it pretty obvious where the world would go to.
And so when you look at Bitcoin, which is a decentralized version, that's completely open, that's permissionless, that can't be tampered with by any single one entity or organization or government, that actually is a very good payment system as well. It's a payment system as well as a good store of value, all in this one beautiful new invention. That's the difference between Bitcoin and these other CBDCs is CBDCs are forced on people from the top, whereas Bitcoin's adopted from the ground up because people actually see the value in having something that can't be debased, that is out of the hands of the governments that mismanage their currencies.
How should the average person think about getting in? Is it too late for them?
Think of it as a way to save in something that can't be debased. And you just have to understand if your life is feeling more expensive, you're probably saving in the wrong money, or at least you're thinking of the wrong money, because the food's getting more expensive. It's because the money itself is losing value. As the houses are all getting really expensive, it's a dollar can't buy as much house as it used to. But for people that have saved in Bitcoin over the last 3 or 4 years, everything's getting cheaper.
I'm sitting down with Sam Callahan. He is the lead analyst, senior analyst, at Swan Bitcoin. So Swan Bitcoin is a Bitcoin-only company that's really a media company first. I like to think of it as does an amazing job of putting out content, education. And so anyway, he's the lead analyst. We're going to sit down. I want to talk today about the collapse of the banking system. You hear a lot about it. We see banks going down. Everyone still has PTSD from 2008. I think there's a little bit of a case of the generals fighting the last war, so to speak. We want to talk about the danger of the banking system, but not just in the United States, but globally, what's happening with that. The dangers of central bank digital currency, CBDCs, and ways that we can counter that. So, jumping into this, let's just talk domestically in the United States. We constantly hear headlines, well, maybe not complete mainstream media headlines, but the banks are in trouble. We saw in 2023, 3 banks collapsed, which were actually bigger than like the 2008 banking collapse. And I know for myself, getting hit really hard in 2008, 2012, 13, 14, I didn't trust the banks. And that's actually what led me to Bitcoin. In 2015, I was in the process of getting money out of the banks to put into a Panama bank account. So I thought the banks in Panama were capitalized better than US banks. And I just said, well, Bitcoin's actually the same thing. I'll just do that. But I had PTSD from banks collapse. A lot of people do. We saw the banks collapsing. So what's the status of the banks domestically? We'll start with that right now.
Well, basically, the Federal Reserve was able to put a Band-Aid all over that. So they came out with their new program, the Bank Term Funding Program, which actually did really well to kind of quell the problems going on there. But you're right, it was the second and third largest bank failures in U.S. history. Now, there's a lot of blame to go around, but I think part of the blame has to go on the banks themselves for poor risk management, because a lot of their depositors were very concentrated in tech, like overly concentrated in tech, overly concentrated in cryptocurrencies. And so when there was a lot of issues in those sectors, they saw a lot of panic and a lot of their deposits flew all out at the same time. Then you had this like traditional bank run. But at the same time, you could also blame the Federal Reserve, because the Federal Reserve didn't provide guidance and said, hey, we're going to keep rates low. We're not even thinking about raising rates. All these banks said, okay, we're going to buy all these bonds at really low rates. And then lo and behold, the Fed went on one of the fastest rate hike cycles in its history. So totally screwed these banks who bought all these bonds. And then suddenly they got all these depositors flooding out at the same time. They have to sell the bonds at a loss, and that's how these banks got into huge problems. But right now, like I said, they kind of papered it all over. And so you could say that they were in trouble. And but now it seems like things are kind of, for the time being, kind of calmed down. But there are some risks there. There's a risk with the commercial real estate exposure with some of these regional banks. And I think we spoke about this a little bit before, but what happened in the aftermath is actually just more concentration of the banking sector. JP Morgan Chase was actually one of the big beneficiaries of those collapses. They picked up First Republic for pennies on the dollar They had record profits last year. And so this is what typically happens is you have more and more concentration. One bank failure that I think still people forget about, it wasn't a failure, but it should have been, was Credit Suisse. It was a shotgun acquisition. Regulators came in, gave UBS a really sweet deal on a Sunday afternoon saying, hey, you guys have to acquire this global systemically important bank. If that thing would have toppled, we would have probably had a contagion event. But now we have more concentration. Now UBS is one of the largest banks in the world because they just acquired one of their biggest rivals. And so when you have more concentration of the banking sector, it leads to long-term fragility, right? Because if something happens to those bigger banks down the road, well, then it's even more risk of a contagion event, more problems. And so this is kind of like the trend we've seen over the last 20 years of just more and more bank concentration, and that leads to single points of failure and more fragility over the long term. And then things like moral hazard, right? If they just think they're going to get bailed out, if the Fed's going to come out and just, put these new acronyms in place and paper things over, then these banks are thinking, well, I can take as much risk as I want. And so you can kind of see how those two things, more concentration, more moral hazard, can create more problems in the future. So that's kind of how I see it. Would love to hear your thoughts too.
Well, the way I think about it is that the banks are almost becoming like utilities for the government, if you will. Instead of businesses, like almost like utilities in a sense where they're being required to buy these government bonds.
Yeah.
Because the government is spending so much money, they need to sell the bonds to raise the money. And if there's not enough buyers, then the banks will be those buyers. And so, and almost being forced to be those buyers, if you will. And then to your point, they bought them thinking, because the Fed told them they were going to keep rates low. He said, not thinking about raising rates. I think he said for 4 years they would keep rates down. And within 2 years, they jacked them up. So they got caught off sides. And so the banks are sitting on the largest losses we've seen in history, but it's paper losses.
Yeah.
So they put the money into government bonds, and the value of those bonds have fallen. However, if they're able to hold those to maturity, they don't actually lose money. Mm-hmm. And the problem is that redemption. But they're becoming these utilities, and they're being forced into that, and they're going to continue to be bailed out based off of that. And I think it's important to understand what that means, well, from my point of view anyway. I want to get to the concentration piece, but when you say that it creates moral hazard because people think they're going to be bailed out, they will be.
Yeah.
They will be bailed out because the government can't allow anyone to have money in the banks to lose that money. So we have like FDIC insurance, which is up to $250,000, but if people lose their money, everyone's going to pull the money out of the banks. So they can't have that. And so the reason why I think about this is that, to your point, they came up with this BTFP funding thing, and who knows how many more programs they'll have to inject money in the bank to prevent this. So from my perspective, the way I think about it is the Fed is telling us they're tightening. They're going to continue to tighten the monetary supply in the market. But I know that they're going to keep injecting money into the banks, which increases the liquidity in the system. That's kind of the way I look at it selfishly. Yeah. I'm curious if you think about the same way.
No, I think of it the same way. I mean, the Fed showed their cards. They can talk a tough game, but when push comes to shove, once things start to crack, once again, the FDIC, the Fed, the Treasury, all colluded together to come in and save things, come in and intervene.
Yeah.
And that was the hand. And so if something big comes down the road, what you're going to see is more liquidity programs. It's going to be a different name, but it's going to have the same outcome, which is pumping liquidity into the system, preventing any kind of collapse from happening.
Yeah.
And so in that scenario, there's a couple of things, which is you'd want to own things that are scarce, right? If liquidity comes into the system, usually scarce assets do well. But one of the things from working at Swan, people started to understand, like, hey, when I have my money at the bank, my money's not there. Like, these banks turn around and bet with it, and I might not have access to it. And so people started to understand the counterparty risk that they take when they trust a bank to safeguard their assets.
Yeah.
And so you have to start thinking about, do you actually own your wealth when you trust a third party?
Let's put a pin in that. We're going to come back to that. So we're definitely going to talk about practical things that we can do to protect ourselves and benefit even, I think, as this goes on. That's the way I look at it.
Yeah.
These are not good things. These are all bad things. I wish they weren't happening. I'm scared for my kids and my future generations, but at the same time, we can use them to our advantage. So We'll talk about that. But let's get back to this issue. So I think we agree, and I don't want to put words in your mouth, but I think we agree that the fear of having money in the bank and losing it is overblown. The real fear or risk is the concentration in the banks. Would you agree with that statement?
Because I only agree with that statement because they will come in and bail things out. Right. So I agree with that.
Now, legally, the money in the bank is not your money, legally, right? So it's owed to you.
Yeah, it's a debt.
It's a debt, so the banks owe it to you, which is why they can do what they want with it. As a matter of fact, I'm raising money for a public deal right now, and someone was trying to wire money in, and the bank said, why are you sending this money? And said, oh, this seems to be related to Bitcoin and cryptocurrency. We won't allow you to send it. Fidelity. Was it Fidelity? I have it on my phone. I forget which, a major bank. Fidelity's pretty crypto-friendly. One of the big banks, and they wouldn't allow them to transfer money, and they're going through this whole process right now. So the banks can actually do that. And so my fear, going back to the real fear, is not so much that I'll lose my money. Maybe it could hypothetically get negotiated down. If the banks collapse and FDIC had to pay, it could get negotiated down through some sort of like a bankruptcy settlement. But I think the bigger fear is this concentration you're talking about. And instead of this decentralized banking system where like, I have a local bank, my local banker knows what I need, he can give me a loan for my small business. Now all the decisions are being made by some conglomerate bank, JP Morgan out of New York, who doesn't know me, and maybe there's less small business funding.
Oh, hands down.
And so if we see a concentration in the banking system, we see a concentration through the economy as well.
Yeah. When you look at the concentration that's happened in the banking system over since the pandemic happened, really. We know from like the PPP loans and some of these programs that the small regional banks were absolutely critical for small businesses. That's where a lot of the rural communities depend on their local, like smaller regional banks. And those are the ones that are closing their doors at an increasing, alarming rate. And so when you think about things like financial inclusion, that's the people that are going to get hurt are the people that don't really have access to banking. And then, the concentration of the banks is a problem too, because like you kind of were alluding to, there's not as much competition. So these large banks can do whatever they want in terms of jacking up fees on their customers, maybe doing something even more, in terms of freedom, like surveillance programs or things like that, like a CBDC, like incorporating these programs that there's really no competition to fight back against it, because it's only like 4 banks that are servicing most of the country, and they're really tied into the Federal Reserve and the government. And you can see how this could become a problem if they start to unload some of these new technologies that infringe on, privacy and basic human rights. It'd be really hard for people to fight back against it if they don't have other options to turn to.
Yeah. Yeah, and we don't have a small local store to shop to, so we're limited on what we can buy. We only can buy from big conglomerates. We can go to Target and we can buy the 5 or 6 things they have on the shelf, but we can't get the specialty.
Same thing in the pandemic, right? They kept Walmart open, but the small businesses weren't. And I think there was a reason behind that.
Yeah. So then as we see this concentration happening, and it's not just happening in the United States, it's happening globally. So as you mentioned, Credit Suisse went down, got acquired by UBS, so it's happening through Europe as well. So we're starting to see this concentration continue to happen. Then you mentioned, let's jump into the next topic, you mentioned then the risk of having something like a central bank digital currency. Yeah. So ideally, a central bank digital currency means it's the central bank that issues the currency as opposed to like a local bank. Yeah. And so as we consolidate and concentrate that down, then that risk becomes even more apparent, I suppose. Now, different countries are in different stages of this. I know you've done a ton of work on this. So we were talking before we kind of jumped on live here. In Europe, they seem to be, well, of course, China was the first one to roll theirs out. Yeah, China. No doubt, right? Communist China, of course they did. Europe seems to be hot on the trail doing that as well. Maybe pushing it much before the United States. Kind of tell us what's going on with that.
Yeah, I'd say out of all the Western countries, ECB and the EU are the furthest along to a retail CBDC. And I think just for people who aren't familiar with it, CBDC, I mean, just imagine your money could be turned off with a click of a button from above. And so it could be programmed to say you can only use it at certain times of the day, or you can't buy this amount of meat this month. So it's programmable so that you could see how that could be used by the government in nefarious ways to stop people from spending their money the way that they want to and be used as a tool of oppression. And so it's really dangerous concept. And China has proven this, right? Some of the things that have happened in China with their CBDCs is like protesters not being able to access the public transportation to congregate together when they're trying to dissent. And, the digital euro is really trucking along despite the public comments saying, we don't want this thing. They continue to build it out, and they're probably going to launch it in 2025. And they just gave an update, and it's really interesting because when you have a CBDC that's issued by the central bank, like you said, that is technically safer than regular commercial bank money because a central bank can't go bankrupt, right? You can't lose access to it because they have access to a money printer. You'd rather own a CBDC that doesn't have that, default risk than a commercial bank money. And so what they're worried about is people taking their money out of the banks and putting it into the CBDCs and disintermediating them. And their solution...
Who's worried about that?
The central banks and the banks. So
I could see the banks being worried. Right. They don't want to get put out of business.
Yeah, the central banks are worried because they're like, this could actually create a lot of financial instability and cause a crash of the banking sector. And that's what the banks are worried about too. Hey, you're going to take our cheapest source of funding, all of our deposits, and this is a problem when we need funding and to make loans in the economy. If we don't have the deposits, then we're not going to make as many loans in the economy, and then we're going to have a crash because it's just like financial instability, not as much. Obviously, in a debt-fueled economy, if you're not making loans, you can see how that would hurt economic growth. And so these banks are worried about it. And so the ECB's solution and all these central bank solutions is to put caps on the CBDCs. Hey, you can only own $3,000 worth of CBDCs at any point in time. We're going to put strict limits from the get-go on this so that people can't take too much money out of the banks. And so they understand this risk. Now, the interesting part is that there's a pilot program happening in India that have been doing this for years with those limits. And the National Bureau of Economic Research just put out a study, and it said, hey, we had these limits. It still resulted in significant bank disintermediation. And so they're still trucking along saying, hey, we got the solution. We're going to put these limits, which, by the way, is funny to think about. Like, the money itself already has limits and capital controls from the get-go. But not only that, but it doesn't stop the disintermediating from the banks. And so these things are extremely risky, not from just a human rights standpoint, but also from a financial instability standpoint. And then the other thing that I'll say is that they need it to get adopted, right? People said they don't want it because of all these problems we talked about with privacy. And so these central banks are going to launch it like the ECB, and they have to get people to adopt it, merchants to adopt it. Well, how do they do it in India? Was they actually taxed all the other payment rails. And so they heavily taxed every other option to basically silo people into these CBDCs. So it gives you an idea of maybe one of the strategies that the ECB and these other ones are going to take, which is tax all the other options, bring people into it, and then you could obviously see how it could be a problem to the banks, but also to just basic human rights.
Yeah.
Privacy.
And what they did in India, it really started, I think maybe if you look backwards now a couple years ago, where I think maybe it was 2016 actually, they took their large banknotes and they said, hey, these banknotes are going to be phased out. We're no longer going to have them. And I forget what they were at the time, the denominations, but it was very, very low amounts. Yeah. And they said, hey, you have, I think it was 30 days or 60 days to turn these in and get compensated for them because they're going to be phased out. But in India, they have a big cash economy there. So people had been stockpiling cash for decades or maybe even generations. And they said, hey, you have to go turn this in or it's worth nothing. Oh, and by the way, you need to prove to us where you got the money from. And if you can't prove to us where you got the money from, either one, you're going to suffer massive tax, like 50% tax, or lose it all completely. And so they first had to bring all that in. Then they started to tax all those other areas to so it's like that slowly, the pig in the fence, like one piece of a fence and the second piece of a fence, and slowly start to kind of bring them in.
Yeah, I think they had a very short amount of time to even bring them in too. I think it was months.
Yeah, it was 30 or 60 days.
It was 30 days, and hey, bring in all your cash in 30 days or else it's completely worthless. And it's just a complete shit show.
Yeah. We've seen Nigeria has been rolling out something similar. They've been doing this e-Naira for a long time. And the e-Naira is also their CBDC. And in Nigeria, they had already been using Bitcoin because the inflation rate was so high. And the people said, well, why would we use this e-Naira? It's like the same thing as the regular Naira. It's inflationary. And so they tried the carrot and the stick. First it was discounts if you used the ENIRA on your pedicabs, things like that. And then eventually the stick came out, which is, hey, we're going to penalize you if you don't use it.
Yeah. And it still didn't really work, though. That's the thing.
Yeah.
People just don't want it. That's the difference between Bitcoin and these other CBDCs is CBDCs are forced on people from the top, whereas Bitcoin's adopted from the ground up because people actually see the value in having something that can't be debased, that is out of the hands of the governments that mismanage their currencies.
Yeah.
I mean, it's very easy for people in Nigeria to understand why they want to hold something that the government can't get their hands on because their inflation rate's in the triple digits and dealt with it for a long time.
Yeah.
I mean, just imagine your savings just literally loses value overnight.
Yeah.
Your wealth that you've worked hard to accumulate. So that's why Bitcoin adoption rates in Nigeria
let's put a pin
are high.
in that.
High.
We'll come. I want to come back to the solutions later, but I want to keep building up some of this. Because I think it's important when we understand like how it's happening in other countries, then we can start to see that path, right?
Yeah.
So another thing I wanted to bring up though is this disintermediation of the banks that you're talking about, and it's not just the U.S. It was like happening globally, and so also at the same time we have like this whole BRICS block rising up. So Brazil, Russia, India, China, South Africa, and now a lot of nations are joining those. And so you sort of have like the US dollar system, banking system, if you will. But now there's this like sort of alternative banking system that's popping up. Big news went round and round a couple weeks ago about Saudi Arabia not renewing the petrodollar agreement that they had, and how that's going to be the death of the dollar. What's your take on what happened with Saudi Arabia, the petrodollar, and sort of this new financial bloc sort of starting to separate from the US dollar system?
Well, it seems like things came to a head when the United States seized the Russia Treasury reserves.
Yeah.
That's when everybody woke up to the fact that, hey, actually the system can be weaponized against us if the United States doesn't agree with our policies. And so you've seen a shift in how many commodities are priced in other currencies. You've seen central banks around the world start to increase their gold buying at historic rates. They're trying to diversify their reserves away from treasuries because now there's a risk that they have to take into account. It's that the United States just come in and seize them.
Yeah.
Or they could block them off from the SWIFT system. And you've really seen this, there's a book called Treasury Wars that goes into this. In the last 20 years, you've seen the weaponization of the United States dollar and the whole dollar, the SWIFT system, the payment system. And so I think you're seeing these countries start to think about that more. And so when you look at Saudi Arabia going and building relations with Russia and China, and they're starting to build out this Enbridge CBDC program, that's basically a CBDC system where they could transact with each other very seamlessly. It probably is a far ways away, but it kind of is a signal to where the trend's going, which is they're trying to build other systems to compete with the US dollar system because they have to protect themselves. It's just incentives, right? They're just trying to protect their own interests because there is something going on with the United States weaponizing the system against them. So they have to basically...
Well, some of them are forced out of necessity, like Russia.
Yes.
You're kicked out.
Completely.
What do? Do you just go die, or do you find a new system?
Right, exactly.
So some of them are forced by necessity, and then others are preemptively trying to protect themselves. So China said, well, shoot, if that can happen to Russia, and every other nation is doing the same thing, well, if that can happen to them, it can happen to us.
Yeah.
So they're being forced into it and then preemptively kind of protecting themselves. One thing that people will say quite often is that you can't just go replace the dollar because the dollar, more than just a currency, it's a payment network, right? It's the most globally recognized payment network in the world. And you can't just replace the correspondent banks that send the money around, the SWIFT system that sends money around, or the bond market, because no one's going to invest into the Russian bond market, the Chinese bond market. What is your counter to that? Or do you agree with that?
Well, no, I do agree with that, and I think it's a long ways away from displacing the dollar.
When you say a long way away, what is that?
I would say decades. I mean, unless there's some kind of hyperinflationary
Is that
event.
1 decade or is that like 3 or 4 decades?
I would lean towards 3 or 4 decades. I don't really know for sure, but the network effect of the dollar is real. And, I think if you just look at the stablecoin growth, like people want dollars. There's actually a shortage of dollars, I would say, around the world. And people want the dollar because compared to other fiat currencies, it is the strongest one. Same with the debt market. It's by far the most liquid debt market. And if you're going to hold the debt of a country, it's, are you going to, in terms of risk, if you compare the United States with some of these other ones, I mean, they have the reserve currency. We have the largest economy, strongest financial markets. We, in our, our country was founded under the premise that we respect property rights. These things
was founded on that premise.
Yeah. So, it's hard to pick like a competitor or a competing product.
Well, let me throw out some competitors, right? So there's no other bond market to invest into. I would agree with that, right? But you could just buy gold.
Yeah.
So we're seeing that. There is no replacement for the correspondent banks in the SWIFT system, but we could just use the Enbridge system, which is early, but I think they've done, $1 billion, $500 billion of transactions over it already.
Yeah.
So they don't have to buy another treasury. Treasuries just could be out. Inside money, as Zoltan Pozar calls it. They could just buy commodities.
Yeah.
And they don't have to use SWIFT. They could use Enbridge, maybe.
Yeah. I would say Enbridge, I mean, even still, like, Enbridge is so far away. I mean, that's, like, not that much volume. And honestly, they're coming into the same problems as the correspondent banking system, because the reason the correspondent banking system is so expensive is because of the differences in laws between the jurisdictions. And so they have to somehow, in the Enbridge program, make them all interoperable while complying with the local laws. And so it's really tricky. And so interoperability is the name of the game. And if you just have these siloed payment systems, you're not really solving the problem. You need it to be interoperable with everything, which is, I mean, I know I keep bringing it back to Bitcoin, but really, I mean, having an open source protocol that's completely interoperable, that's actually what they need. But they're building these like siloed closed systems. And so I think it's going to take a while, even if it's better speeds and fees, for them to overtake anything like the SWIFT system. I mean, that has 50 years of a head start right now, even though it's inefficient. It has those risks. I mean, there is a network effect there. And so I just think it is probably decades away. But like I said, it's kind of like the trend is clear of what they're trying to do.
Yeah.
Whether they'll be successful. But then, I mean, I didn't know this, but like the basket of from the Russian.
The NDB.
Yeah, the NDB. Like, that was interesting.
The new currency.
We can talk about that, because I find that really interesting.
So what he's talking about is about a month ago in Russia, they held a meeting, a St. Petersburg International Economic Forum. So another economic forum, and specifically to counter the World Economic Forum. So everyone thinks that the World Economic Forum and the U.S. and we're having this one world government, but that's over. Like the dream of that is over at this point. I mean, the last couple of weeks we saw Klaus Schwab being taken down with allegations of sexual misconduct, and like when they're taking him down, right, you're starting to see that. I think he announced he's stepping down. So anyway, Russia had a meeting, and they created one, St. Petersburg International Economic Forum, and in that, about a month ago, they announced a new currency that they're calling the unit. And the unit will be backed, it's by the NDB, which is the New Development Bank, which is sort of this BRICS bloc's counter to the World Bank. And this new unit will be backed 40% by a weight of gold, not a dollar amount, but a weight of gold, sort of like how currency used to be. And then a 60% as a basket of the currencies, which is sort of what John Maynard Keynes had wanted to happen out of the Bretton Woods Agreement, to have sort of this basket of currencies. So let's talk about how we protect ourselves now. I wanted to set up the problem. It's important to understand the problem, I believe. I could sometimes come across as a doom and gloom kind of guy because I talk about problems, but I think about it as problems creates, or solutions come to problems. And I think it's important to understand the problem so you can plan to, how do I protect myself? If someone said, hey, they're going to come break into my front door, then I'm going to barricade my front door, and I'm going to make sure I have an escape out the back, right? So I want to know the attack vector so I can plan appropriately. Mm-hmm. So that's why I want to kind of spend some time doing that. So we've sort of set up the problems that we're seeing right now. And so if we kind of paraphrase this real quickly, or summarize it really quickly, in the United States, the money in the bank isn't probably at super great risk. The bigger risk is more of a long-term risk of continued centralization. Mm-hmm. But at the same time, the world is starting to decentralize the banking system, or disintermediate the banking system. So we sort of have these two opposing forces. When you understand that, and then you understand there's a solution like Bitcoin, it makes it pretty obvious where the world would go to. Go ahead and break that like down, how the average person could kind of think about that.
Well, it's pretty simple. I mean, when you look at the banking system and the concentration, there is a certain amount of trust that you're having, and you're trusting these organizations to manage the money appropriately, but also to not incorporate draconian type implementations of security and surveillance and things like that. And so when you look at Bitcoin, which is a decentralized version that's completely open, that's permissionless, that can't be tampered with by any single one entity or organization or government, that actually is a very good payment system as well. It's a payment system as well as a good store of value, all in this one beautiful new invention. And so when you look at a decentralized system where you remove the need for trust, you don't have to trust these banks anymore, and you're free to use it at your own will, and you're using a form of money that can't be tampered with or manipulated, I think more and more people are going to understand the value of that, and they're going to continue to flock to Bitcoin like they have. I mean, there's a reason why it's becoming more and more popular over the years. If you just look at it anecdotally, you don't even have to be a fan of Bitcoin, but just ask yourself, is Bitcoin more popular than it was 4 years ago? I mean, the answer is definitively yes. I mean,
let me answer that, because it's something I said at dinner last night. Yesterday, big news announcement came out that President Trump will be speaking at the Bitcoin conference in Nashville in like 2 weeks.
Yeah, it's crazy.
So we have an event, the Bitcoin conference in Miami. Like 2 years ago, it was 25,000 people. I'm not sure what the attendance will be this year. 15,000 people, call it 20,000 people will be there. You have President Trump. Lots of politicians will be there. The top Wall Street people, the top fintech people will be there. Some of the best coders and engineers in the world will be there. Some of the best entertainers in the world will be there. I think it could be the biggest, most culturally important event going on in the world, at least the United States.
Yeah.
It's not just a magic internet money. This is the biggest event, 20,000 people, with the biggest people, including the President Trump, all there.
Yeah, we're talking about the largest, wealthiest financial institutions, the BlackRocks of the world, the Fidelities of the world. Goldman Sachs has just announced they're getting into the game again. So, I mean, and then you got the largest, probably the most popular person on the planet, right? Donald Trump is speaking at Bitcoin. And now one of the major political parties has incorporated into its official policy platform.
The RNC.
Saying that, hey, we're gonna support Bitcoin. We're gonna denounce CBDCs. We're gonna support the abilities of people to take custody of it. We're gonna support Bitcoin mining. And why is that? I think they're just starting to understand that this is a really, really important technology to embrace for really the competitiveness of the United States on a global scale. And I agree with you completely. I mean, what other conference in the world brings together that kind of wealth and influence? I mean, you would have to think like Davos, but that's a whole nother type of influence we're talking about there. That's more like power and control, whereas this is just like innovation and pushing forward this technology that actually brings power back to the people. And so it's exciting. I mean, it's very, very different than it was 4 years ago. That's for sure. I mean, the stakes are a lot higher. It's matured a lot. It's really coming onto the world stage in a meaningful way at this point.
Yeah. I mean, you have President Trump and RFK Jr. have both not just endorsed it, but embraced it. You have nations like El Salvador. That's been a global miracle, and President Bukele is now going and talking with other world leaders about making this shift. It's definitely gone from, again, that magic internet money to being on the world stage. And so for everyone listening, I think we've already kind of set up the problem and the solution. It seems inevitable, but how should the average person think about getting in? Is it too late for them? How do they think about, saving in it versus investing in it, things like that?
Yeah, so I always like to tell people to think really long term when they purchase Bitcoin. Think of it as a way to save in something that can't be debased. And you just have to understand if your life is feeling more expensive, you're probably saving in the wrong money, or at least you're thinking of the wrong money, because the food's getting more expensive. It's because the money itself is losing value. As the houses are all getting really expensive, it's $1 can't buy as much house as it used to. But for people that have saved in Bitcoin over the last 3 or 4 years, everything's getting cheaper.
Yeah.
And why is that? It's because you can't print more Bitcoin. It's actually a scarce asset that actually increases in value as they continue to debase the other currency. And so you have to just think about, hey, yes, this thing can move in the short term. The price in fiat terms can move in the short term. But I own something that's very, very scarce that is actually going to benefit from the continued money printing that's going to happen in the future. And so I always recommend people just zoom out, understand that as Bitcoin gets adopted, as this trend continues, that it becomes more popular, more influential, as the governments and major financial institutions continue to build on it, and we're still in the very early days of this, there's only one thing that can happen to Bitcoin's price, because the supply is completely fixed. And so if there's more demand for something that's fixed, it's just basic supply and demand economics, where the price is it's gonna go up in value. And so yes, it's gonna be choppy. It's a choppy ride, but when you think long term about what you actually want to save your wealth in for the next 10, 20, 50 years, it's hard to look at any other investment that has the same asymmetric profile or opportunity as Bitcoin today. It's we can get into real estate, has issues. It has maintenance issues. It's physical. There's natural disasters. There could be changes in tax policies. It could be seized easily. So it's like, do I want to own that for 50, 100 years? I don't know. Do I want to buy some stocks? Most businesses fail over long periods of time. Majority of them fail. Do I want to hold stocks of a specific company or index funds where most of them are duds? I don't know. Probably not. I want to own something that I know is going to be scarce and it's going to be around for the next 50 or 100 years. And that's why I think people should own Bitcoin and think very, very long term about holding on to it.
Good. Do we have any questions? Anybody want to ask Sam or myself any questions?
I'm not that what is bringing up to ask. I do buy it.
Oh, cool. That's great.
I retire, and so it's small,
Yeah, that's great. A small amount goes a long way too in a portfolio. That's the one thing I'd say too is, you don't have to buy 100% of your net worth into Bitcoin. Even 1%, 5% has been shown to have meaningful difference to a portfolio because it moves differently than the rest of your portfolio. And then also, if we're even remotely right about where this could be going, 1% allocation to 5%, it's going to grow pretty meaningfully, and in a short time, it could actually make up a greater percentage of your overall net worth. But position sizing is important for people because it's very volatile. You don't want to overexpose yourself and get worried about, it being down 50, 20%, whatever it is. And so it's just about risk management. So there's nothing wrong with that. I just recommend people purchase what they feel comfortable with, but the wrong allocation is 0. That's what I would say today. Yeah.
Yeah.
Questions? What was the other great analyst you said?
I didn't say to SWIFT. Well, I think we were talking about mBridge, Project mBridge, which is from the BIS, Bank of International. M, with the letter M. Yeah, the letter M.
Yep.
So M and then bridge. And so that's being built by the BIS, Bank of International Settlements. And that is a new way for countries to pay each other, basically.
Yeah, it's like Hong Kong, Bank of China, Saudi Arabia, UAE. They're all kind of piloting this new system of CBDCs together to try to, like you said, kind of compete with SWIFT.
Okay. You better see the U.S. government on it.
Well, today the U.S. owns 213,000 Bitcoin. So they're actually the 5th largest holder of Bitcoin, just from seizures over the years. And they haven't sold it. So technically they already own Bitcoin right now. Do I think the Federal Reserve is going to buy it and put it on its balance sheet? I mean, maybe.
If they were smart.
If they were smart. I mean, they still own some gold on there. So
the flip side to that is maybe what might go down as maybe one of the worst moves in history from a government is right now Germany has been sitting on billions of dollars of Bitcoin, and they've been selling it all. And there's been talks of the U.S. selling their Bitcoin as well, but it would be like, I live at the beach. I own the beach, and I have, I own all the sand because I own the beach, and I have one scarce asset that I'm going to trade to Sam for more sand.
Yeah.
I already have the sand. Why would I give up the one scarce asset from our sand? So the U.S. is literally going to give up, could potentially, or Germany's giving up their scarce asset or their Bitcoin for more currency that they print. So it doesn't make any sense.
Yeah, it doesn't make any sense. It reminds me of in the past where, tribes have used seashells as currencies in the past, and then they come in, like foreigner comes in, and they have other precious resources, and then they bring the seashells from somewhere else, and they say, oh yeah, I'll give my precious gold or whatever, and I'll take more seashells. It's the same thing. They're trading something very scarce for something that, like you said, they can print. And so I think they've sold, similarly, they had 50,000 Bitcoin seized from a movie's piracy site. They've sold off, I think, at least half of it by
75%, I think.
I think they sold out about 30,000 Bitcoin. And I think when they look back on that, that's going to be very, very silly. They're going to really kick themselves.
Yeah.
But the U.S. government has sold a little bit here and there. But they like I said, they still own 213,000 or about 210,000, I think, right now. And you got to think why they aren't selling like Germany. They've held on to it for many, many years.
And there's been some talk, let's say rumors coming out of the Trump administration about potentially starting a strategic Bitcoin allocation for the United States. Nothing official. It's rumors on the wire, so to speak.
Yeah. Right now, El Salvador is in the lead. So El Salvador buys a Bitcoin a day. They're stacking sats slowly, just at the government level. And the thing about Bitcoin is it really is a first mover advantage for people adopting it. That's the game theory. If you decide to sell your Bitcoin or not adopt it, somebody else is going to do that. And so if they continue to benefit from Bitcoin, like El Salvador is doing right now, eventually nations are going to wake up and look at that and be like, well, maybe we should just buy a little bit too. And then you see how this could be a flywheel of momentum for Bitcoin. And the beauty about Bitcoin is everybody benefits who owns Bitcoin at that point. And so very early days, though. It's like early days with the institutionalization of Bitcoin with these large Wall Street firms and nation state adoption. We are really just right at the start of that. So when people say they're late, I think that's nonsense. I think we're very, very early. Bitcoin's about 15 years old. I think it's very, very early days for Bitcoin still. Just look around in this room right now,
Everyone's still out there looking at gold. All right, well, I think we'll wrap it up with, okay, go ahead.
One more. Not a banking question per se, but this is my first halving cycle to go through. I've been involved for about 3 years now. I'm curious about the miner response to the reduction in Bitcoin harvesting they can do, and how long their capitulation they last. Since I've not seen this before, I'm curious what people think is going to happen next.
Yeah, so you're right. So after the halving, Bitcoin miners' main revenue gets cut in half. I would say this time around, I feel like the mining industry really prepared themselves, I would say, compared to previous cycles. And the way they prepared themselves is they kind of built up their treasuries a little bit. They have larger cash positions as well as Bitcoin positions. They have more of a buffer. And then they really updated the efficiencies of their fleets to the newest machines. And so they kind of prepared for this eventuality. And you kind of see this because you didn't see as much hash rate drop off right after the halving, whereas previous cycles, you see a really steep decline in hash rate because a lot of miners became unprofitable. And right now, the price is going sideways. So you didn't have the ETF influence with the previous one. Yeah, that too. You also had the price going up all-time highs before this halving, which never happened before. So there's a little bit boost from the price action as well. But right now, price is just going sideways. And so these miners are kind of hoping that it goes back up. They're kind of maybe selling a little bit of Bitcoin they have. They're kind of draining their reserves a little bit. They're also looking to diversify their revenue streams. AI is making a comeback now in all these headlines about Bitcoin miners. But a lot of them locked in these good power contracts and they're surviving right now. And I think they've actually done really well. I think you might see some more consolidation in the mining industry. You might see some acquisitions. There was just one with Grid and CleanSpark just the other day. So you might see some more consolidation in the mining industry, more acquisitions, mergers. But right now, I think they're doing pretty well. And I think they're just hoping that the price is going to do what it usually does with previous halving cycles, which around like 4 to 6 months afterwards, you start to see a run up in price. And I think these miners are hoping that happens again. So I don't know if Mark, you want to add anything. But.
No, I mean, I would agree with that. You know, the Bitcoin mining space is very competitive. And so you have, potentially your single biggest expense is the power that you're paying for. And so different people have different power prices and contracts locked in at different rates. And so what happens typically is the miners that are the least efficient, either they spend too much in electricity or their machines are older to the point that they made whatever, they'll start shutting off first, right? Which then the distribution of those coins then go down to everybody else down below them. For everybody that doesn't know what that means, if the price of gold were to go to $10,000 an ounce tomorrow, then theoretically we would have way more people going to mine gold. And the rate of new gold coming out of the ground would increase rapidly. But when the price of Bitcoin goes up, there's no ability to get more Bitcoin out of the ground. So right now there's 4.5 Bitcoin every 10 minutes. There's 450 Bitcoin a day, I believe, is what's coming, new supply being created. And even if the price of Bitcoin went to $10 million tomorrow, more people would go mine it, but you couldn't get more out. And so what happens is the new supply always stays the same. And if some of the miners were to shut down because they were no longer profitable, the same 450 would still be created. It would just be split between a small group of people. But I think one other thing that maybe, I'm just curious your take, has maybe been helpful is Bitcoin miners actually make money in two ways. They make it through the new supply issuance, but they also make it through fees from processing transactions. Yeah. And we have seen the fees for transactions have gone up, at least temporarily spiked up.
Yeah,
do you think that really helped offset that?
Around the time of the halving, that really helped offset it.
Yeah.
At least for like the first month. That's kind of drained back down to some of the speculation around these ordinals and inscriptions. Have kind of died down of late, but that kind of drove fees up, which really helped the miners at the beginning, right? But that's kind of died down now, so the fees are kind of back down, and will that spike again? Potentially, but I don't think miners are kind of like betting on that, because that would be kind of a risky thing to do, I'd say. So like the fee market in Bitcoin fluctuates pretty randomly, so could it happen? Yes, but I would think that was maybe like a little bit of a one-off demand. Like maybe it might come back a little bit if there's a lot of speculative fervor that comes into the market, more retail investors, new entrants come in. That could bring the fees back up, but that maybe that's like next year or something. I think there is still like a speculative mania part of the cycle that hasn't happened yet.
Yeah.